The embattled crypto trading platform FTX has secured bankruptcy court authorization to initiate the sale of its stakes in digital trusts under the management of the prominent crypto firm Grayscale Investments. By the way, Hong Kong regulator has considered allowing ICOs to bolster its economic revival. Join me guys as I look into the Bitcoin's rally and its optimistic future. Buckle up and sit tight. If this sounds like something of much interest to you, be sure to check out this new video starting now. Hello and welcome to our channel, where we talk about the latest updates from the world of cryptocurrencies in general. If this is your first time watching one of our videos, we extend a special welcome to you. We invite you to hit the notification bell so you never miss another video. Now, let's dive in. As of last month, FTX's stakes in Grayscale's trusts were appraised at approximately $744 million, as disclosed in the cited court papers. This development was captured in a recent report by Bloomberg, citing a fresh court document. Per the report, the move aims to generate funds essential for repaying FTX creditors owed substantial sums running into billions of dollars. Notably, the court document stated that FTX intends to execute the sale of these assets in a manner that maximizes their value. At the same time, the sale will happen in ways that minimize disruptions to the market for the corresponding digital investments. The Bloomberg report noted Grayscale had offered investments associated with diverse digital currencies. While purchasers did not possess the physical currencies, they instead received shares in trusts curated and overseen by Grayscale. It is worth mentioning that FTX's strategic liquidation comes in the wake of its filing for bankruptcy in November 2022, coupled with allegations of fraud. Since then, the company's administrators have diligently pursued the recovery of assets and navigated the complexities of entangling a web of deficits owed to diverse creditors. It includes customers who had funds in both cash and crypto on the now-defunct trading platform. Remarkably, FTX's administrators have recovered about $7 billion in assets to date. Of the value, $3.4 billion are in cryptocurrencies, as detailed in court documents. This latest move to sell stakes in Grayscale-managed trusts represents a pivotal step in the ongoing efforts to settle FTX's financial obligations. The case, officially known as FTX Trading Limited, 22-11068, is being overseen by the U.S. Bankruptcy Court for the District of Delaware. Well, that's not all. Hong Kong, a city renowned for its dynamic financial landscape, may be toying with groundbreaking changes in its digital asset approach. In a recent letter, Mr. Chen Jiahua, president of the Hong Kong Securities and Futures Association, proposed introducing an initial coin offering (ICO) mechanism in Hong Kong. The suggestion was one of many made by Jiahua as a potential solution to drive its economic revival. Jiahua said, "Hong Kong's economy has not yet fully recovered after the epidemic, and although Chief Executive John Lee has announced the future development direction, the industry believes that there are still many aspects that can be improved to stimulate the development of Hong Kong's financial industry." By formalizing ICOs, Hong Kong would be a nurturing ground for crypto startups and investors seeking regulated and secure opportunities. The letter emphasizes the importance of government engagement in economic recovery and policymaking, highlighting the need for a collaborative approach towards the crypto sector. This call for active listening and considering diverse perspectives signals an inclusive and forward-thinking stance. Such engagement could pave the way for more supportive policies and frameworks, fostering a conducive crypto innovation and growth environment. Initial coin offerings, ICOs, are a funding method that began gaining attention with the Mastercoin ICO in 2013. Ethereum's ICO in 2014, raising over $18 million, marked a significant milestone due to its introduction of smart contract functionality. The popularity of ICOs surged in 2017, with projects like EOS and Tezos raising substantial funds. In ICOs, investors receive tokens, which may offer various rights or utilities within the project's ecosystem. Initially, ICOs operated with minimal regulation, attracting both interest for their ease of fundraising and concern over investor protection. The increase in ICO activity led to regulatory scrutiny, particularly from bodies like the U.S. Securities and Exchange Commission. The boom was marred by fraud and scams, highlighting the risks involved in unregulated fundraising. The value of tokens issued through ICOs was often volatile, with echoes of the dot-com boom of the late 90s. However, should a financial region such as Hong Kong adopt a progressive approach toward revitalizing ICOs under terms favorable to upcoming Web3 projects, the global perception of the fundraising method could evolve. To indicate that Hong Kong ICOs would not be a Wild West, Jawah also stated an urgent call to review and enhance anti-money laundering, AML, and counter-terrorist financing legislation. The letter also proposes integrating ESG and Islamic finance elements into investment immigration policies. This integration reflects a growing awareness of ethical and sustainable investment practices. By incorporating these principles, Hong Kong could establish new standards for responsible investment, aligning financial innovation with broader social and environmental goals. As Hong Kong's financial authorities contemplate these recommendations, the potential for a more vibrant, diverse, and secure crypto ecosystem becomes increasingly evident. Implementing these changes could solidify Hong Kong's position as a global hub for financial innovation, particularly in the burgeoning field of digital assets. The anticipation of next year's budget, coupled with these proposed initiatives, paints an intriguing picture of crypto's future in Hong Kong. Now to our main focus for the day. Despite Bitcoin's rally causing a huge wave in the crypto space, many investors are still skeptical about the future of the world's leading coin. So, is Bitcoin's 65% crash possible? Please, do not forget to subscribe to our channel and also hit that notification bell to be the first person to get more updates about the latest happenings in the crypto space. Bitcoin is still trending at a reasonably high price, especially after falling below $15,000 in 2022 following the FTX collapse. Given its rise since then, investors have turned bullish, expecting the start of another bull market. However, not all investors have bought into this bullish narrative for Bitcoin, and this is evidenced by the amount of buy orders sitting at prices more than 65% below its current value. In an interesting turn of events, a developer has revealed a massive buy wall waiting in the expectation that the Bitcoin price will crash further. 1x, formerly Twitter, user who goes by at Ted's Talks Macro took to the social media platform to reveal the massive buy wall. According to the post, there were 4,500 BTC bids waiting at around 65% below the current price of Bitcoin. These Bitcoin bids came out to a total of $54 million, going by the asset's price at the time, and made up the largest buy wall at any price point for the cryptocurrency. These 4,500 BTC bids at the $12,000 mark suggest that these Bitcoin investors expect the price to keep falling. Now, if the Bitcoin price were to return to this level, it would mean an approximately 68% drop from the tight range of $37,500 to $38,000 that the price has been trading at. Another ex-user pointed out that the buy wall did not recently appear. Rather, the 4,500 BTC bids have been standing for more than a year. In response to Ted's post, another ex-user, Luke Broyles, took to the platform to explain why there are so many bids for Bitcoin at $12,000. According to Broyles, the bids are a result of a big unit bias level that investors developed during the FTX crash. When the crypto exchange filed for bankruptcy in 2022 and the Bitcoin price dropped to $15,000, the calls for a decline to $12,000 had intensified. But of course, that never happened. However, not all investors have let go of the belief that this could still happen. Broyles explains that many people have either $10,000 or $25,000 saved up, which would have made a nice comfy amount of coins at $12,000. Further adding that, buying 2 coins at $12,000 sounded better than buying 1.5 in low teens. The crypto enthusiast posits that the market has already moved beyond this level, although some people have yet to accept it. Lots of people still waiting for $12,000 still yet to accept. Market has been reversing for over a year now, Broyles concludes. Now, I'd love to hear your thoughts on this in the comments section. Write us anything down here, we are very eager to read you. Always remember that you are an important part of our community. With that, we come to the end of this video. If you enjoyed it, give the video a like and don't forget to subscribe. This really helps me with the YouTube algorithm. Also share this video to as many people as possible. Let's get this news everywhere. See you in a future opportunity to talk about the latest news that concerns us all as a community. Thanks for watching.